Greetings, market rebels and market watchers. Welcome to this week's macro measure combined with what was formerly known as our sector situation video. It is Friday, February 13th, 2026. It's roughly 3:25 p.m. here on the East Coast. I'm Wayne. Here's the Trusty Market Rebellion disclaimer. Here is the Trusty Market Rebellion intellectual property rights notice. Here is last week's slide that we are going to very briefly review. I did highlight a few areas in that sort of pinkish color that may have helped out. I would say last week's expectations were probably the most far off that we've been in since as long as I can remember, which doesn't mean anything, but it's as long as I can remember. It just means that's I'm telling the truth. I really felt like we were going to get more follow through than just that Monday, and we didn't. Just because this was we got a strong bounce after quite a bit of selling, and I thought they'd at least start getting IWM and spiders back towards the near the all-time highs because diamonds had already falsely broken out that way. Qs were a different story, but I still thought they would try to move up a little bit. They really didn't. We all know why. I guess you said we'll get to that, but let's cover this quickly first. Probably some of the only things that were worth much last week where something's not right if there's little follow through. That was probably it, right? When you saw that we were starting to turn around on Tuesday, which is one reason we call it Turnaround Tuesday, and then really unwound Monday's action. That was a little bit of a tip off. Didn't get it going really on Wednesday. Again, another struggle. And then you get, the rollover the last day or two again. So that was a little bit of a tip off. I would say Friday's big name. I wanted to hit on that because we did have some of those big names triggered. Some did not. The ones that triggered, quite a few of them really powered. There were some really great moves, large but short moves. So not all of them really kept going up for the week, but there were some really good moves that came out of that. So it was, that's normally a good sign when you see the commitments come in for that. I don't know, maybe those players themselves might, who knows, may have been caught off guard by let's call it the lack of duration of the move in the major index ETFs higher. They did get some good stuff. They probably thought they were buying some good individual names when they got involved in some of those call side ideas. But some of their stocks worked out really well. But clearly, right, the indices did not get it all together. We did ask the question mark, is all well? But I really did think it was closer to well than not well, and it was actually closer to the not to not well than well in the end by the end of this week, and that's going to happen. It's very hard to get it right all the time. I really don't get that excited, but I really thought there'd be a little bit more to that bounce, and then we had to wait and see if they were able to push through. To and then through those all-time highs and spies and IWM, but they really didn't sniff them. If you want to stretch it, you could say, well, it wasn't that far away. It wasn't. I think the all-time high in the SPY is 697 84, and we did get up this week to 697.14. In IWM, it was 271.60. We got up to just under 269, so about a little bit, maybe roughly you could say 1% away. I just thought both of them would do it in a more forceful way, a little bit more strongly. They did manage to kind of make it near there, just not as much as in the way or as impressively as I thought before the rollover set back in. So it is what it is. It's a good thing we did remember where we left those DEF CON shields because we didn't want to put them back in storage and we wanted to be ready to reach for them. And that came in handy, not really being uh, super locked in, thinking there was virtually a fait accompli that we would make new highs and break out. Here is this week's slide. So I'm going with turbulence but. And the reason for but is because we have a lot of buts in the commentary. Because there is a lot of sort of swirling balance, counterbalance. There's go, no go, whatever you want to come up with. That kind of stuff is really under the surface of all this right now, as I see it. So you've got that point and counterpoint. And so let's go down through our list. We're going to go at 2x speed. I still think it's just remarkably dramatic right now in terms of the potential in so many ways. We're just going to keep ripping because we're rapidly running out of time here. I'm running out of energy. I never have enough prep time. We're going to do the best we can. Pretty much the same that we do every week. So the AI damage fallout trade, you could think about that as maybe that Grim Reaper meme that shows up on social media here and there. That's basically become space after space, right? They started to wreck software, of course, but they wrecked other things, and they just seem like, oh, well, there's going to be fallout here, there's going to be fallout there. It starts getting wrecked. That's just that expanded this week. We did also see defensive sector positioning. So a lot of those defensive names that I've got listed right there, they all did either hold up well or ran. The TNX rolled over hard, so yields are coming down. That could be indicating, right, that there's money moving into bonds and your yields are dropping as a result with higher bond prices. And then you've got VIX ending the week with a pulse, which is something we don't often see. So don't know what it portends for next week, of course, but if you just look at it, this save that they engaged in, well, I don't want to jump ahead too far. I do want to note first that back half of Feb and Sep are some of the worst back halves of the month of the year. And we are in year two, which is the worst year of the presidential, 4-year presidential election cycle or presidential cycle. So we've got a couple cycles there, maybe just worth noting that are not really trying to help us out if we're bulls. We're bringing this back again, right? There was wild action. We did have a typical late week save again near key support levels, but it wasn't as forceful as last week's jam. So we just did not get that kind of finish where they really were able to jam it right back up. I mean, right now it's looking more like a weak close and kind of like barely clinging to key support. And there's still about what, 30, just less than 30 minutes to go. So I'm more concerned with this close but than last week. But last week I thought it was going to do better, and you could see, it's tough to extrapolate, which is why as short-term traders we have to really just adapt as best we can when our scenarios don't play out as forcefully. We have to start acknowledging that and maybe realize that okay, it's not ripping back the way that I thought it could or should. Maybe I should trim, maybe I should roll, that kind of thing. Anyway, another redux is very violent under the surface, but major held trend, held support, right? So that's what's going on. These major index ETFs have uh, held the trend. Still, I do think I'm very much more concerned about going into this week than last week. But again, I felt much better about last week and it didn't really materialize. And that's going to happen, as I say. NDX, the yearly average drawdown from the average over the last 30 years, so what I saw from Tom McClellan, that drawdown is about 21%, and we've already dropped 22%. So for the average, I think stock. So not all, but the average. So pretty much right there in line. It's an average though, right? So some years are going to be worse than others, and vice versa. Clearly, right, something is not right. This is still the case, I think, just because there was such little follow through. I'm probably being a little hard on myself because I did think, we did get less than 1 point in SPY from the all-time high. But still, yeah, and I'm sorry, less one, yeah, 1 point rather than 1%. But still, right, I still thought my real gut, to be honest, was that we were going to do better. I thought we would get very close to it. You could say that's close, but I thought we'd get closer. I thought IWM would get closer. I thought that they might put together a false breakout more so than a failed attempt to even get there. Let's put it that way. And that didn't happen. And that when you don't get what you expect, that's when you have to really think about what's going on, right? Like why? Because if you get a pretty good feel for the market, it's sort of trading the way you think more often than not. And then because you're basically looking at the trend and the other factors, and going with it. When that doesn't work, you've got to say like, okay, what's going on here? So we do want to note too, right, that the AAII survey showed a massive bear spike. It's not a record or anything, but it was a big jump in bearish outlooks, and that is contrarian, right? And here's where all the buts start coming in. But the shorts have really spiked in tech slash the XLK. If you go look at that one, so I had come across that on social media. So that's looking like, well, wait a minute, shorts are really in there, but we know that's also contrarian at times. SMH though has really hung in there, so it's pretty hard to say, well, the whole story is about to unravel because probably the lead sled dog of them all is SMH out of your sector ETFs or whatever you want to call it holders. And anyway, that is still barely off the all-time high. So that's been very resilient, but it could have a double top, right? It's got a really tight sort of double top look to it right now, yet it's been very resilient. So that could be right. If you could take the half empty look and say, well, that's because it's going to be the last to fall. They're not going to give up on their most cherished prize, which is, essentially semiconductors. Could be the case, right? Could be the case. Getting back to UOA land, which gave us some non-triggers and some really great moves with last Friday's action. This week to me was another relatively mild sort of a dud week. And when the market is as discordant as it is and has been, that's the case, right? So essentially, right, people are, let's say big players maybe are befuddled, and the befuddled mind says no, right? If you're not sure what's up, you don't feel like you no longer have a handle on it. Most people that are professionals with any sense of right responsibility are not going to start willy-nilly dropping big money on option trades or options positioning, right? So they're holding off. So if we're in tune with them, we're maybe not far from where you should be. You're waiting for more information to become available, and that could just be in the form of price action, right? We don't know where things take us. We are at a juncture that's really very interesting because you could easily have the resumption of a breakdown where you have further rollover. You could also have really something akin to a double bottom or slightly higher low or similar low, and then you bounce, right? Sort of like a double bottom. There's a lot of things that can happen from here. So the possibilities from here are pretty tough. You could have a fake rally back up that gets really truncated quickly. You could have a false breakdown where they then rip it back up. I mean, you're in a tough spot and you have to trade that way, right? Trade sort of with one eye on the exit until you really feel like you've hooked it. And then, of course, you're still making adjustments, but you don't have to keep your finger on the mouse, so to speak. Those big bets have just dried up, and that's what I'm getting at. Are they doubting themselves? So if you think about it, right, all this money has been placed in all these places, and some people they have just said the hell with it and blown out of their holdings, or at least some of them. And some people haven't given up on it. They're probably still processing it, trying to figure out, well, wait, did I have the story wrong? Is this AI progress, if you want to call it that, is that now forcing the hands of some more quickly where they're like, oh, I'm not so sure I've got this nailed anymore, right? My thesis might not be as dead on accurate as I thought it was going to be only a few weeks ago. So I'm just throwing that out there. I'm not saying that that is the case. I'm saying it could be the case. It could be part of the case. The market breadth is not atrocious, but the sectors are definitely flashing risk off. Risk off. We talked about those defensive sectors getting bid up or really hanging tough at the very least. And we also would have to say that the four major index ETFs, again, they're holding trend, but they're at a precarious juncture, right? They're not very far from where bigger trouble could start to unfold. However, right, this is another but the buybacks have really cooled off into the end of this week. They're starting to pick up next week, and then they pick up really strongly over the next 6 weeks in total. So that could have something, if you think about it, right? That could have something to do with because you get through earnings and so on and so forth. It could have something to do with why the performance is the way it is around here in terms of the back half of February. It's because, right, they really haven't been, the buybacks haven't been there. There's been weakness as a result of the buybacks. They start to turn the tide. I don't think they start to jam right back up immediately, but from what I read, they start to turn back around and become stronger right as we head towards the back half of the first quarter. So just want to mention that. So I'm going to go with cutting to the chase, tricky stuff, because we could easily see head fakes or real moves from where we are at this juncture, as I already mentioned. And so you likely had to reach for those DEFCON shields this week. We knew where we left them. That was the plan. And so you have to remain ready because you probably want to have it in your hand at this point, right? You probably really want to, and that means, a lot of things, but it could definitely also mean that you have your downside put butterflies picked out. For me, like I've got some long VIX call spreads. I'm really light on positioning right now. I feel like it's messy, and I try to pull back and not really commit too much until I feel like I've got a better handle on things. And I don't feel like that I have that right now. So I'm just going to let my hedges potentially work without really getting offsetting too much. The only thing I'm really still having a little bit of is I believe is in any meaningful way is still in metals because I view them also as a hedge. So on that note, we're going to stop the share and we're going to, or we are, I think I've stopped the share here. Lets me stop share. We're going to get into the charts and I'll try to do this as quickly as I can. Let me see if I can get the chart over here. We'll pull everything into one screen so we don't have to jump all around. Oh, there's that chart. Yeah, I'm still having that problem. So I'm still having that problem with Thinkorswim. Why it's doing what it's doing to me, I don't know. It's basically keeping labels up, despite the fact that I removed the indicators. That I was just testing some strategies because I wanted to see, like kind of investigate a few factors that I've been meaning to get to, just for enhancing what I do and trying to learn, always trying to learn. But SMH, I think it's a great place to start. This should be on the screen right now, and it is. This is where we're talking about the possible double top. But I took a lot away to be able to use this on our cocktail hour webinar. You could see the trend, right? You could see just like really just yesterday, right? You were at 420.04. Again, you were just really pennies away from a new all-time high. And that's see, that on the one hand, right, you're like, okay, so that's not so bad. What's everyone getting all worried, all worked up over, all worried about? But this is what we've seen. We've seen a lot of these where they do make their new all-time high, and then there's a kind of violent pullback, right, that's pretty severe after it. Not all of them, but quite a few of them have had that. And so you get close and fail. Do you get another one of those rug pulls in semis? Maybe you do. I don't know. It could be right that they start if there's more weakness in other places, they start worrying about uh-oh, and they start finally coming for things that were sort of impervious. That could be SMH. I'm not predicting it. Now, this is why things are just so dynamic because if you dip down here, fall below the 20, let's say on Monday, and then people start getting worried, they draw fresh sellers in. A lot of the rest of the market's already bombed out, right? There's a lot of bears, and then we know there's a lot of short interest. So all they really have to do then is pull a turnaround Tuesday and start coming back up, and now you have a higher low in place, and they could easily, right, extend for a week or two with these buybacks, the heavily shorted factor, the overly bearishness factor, and you could be right up at new all-time highs, and you'll get the gang that says, "See, told you so." So, you get the "See, told you so" if it drops or goes up, but you get the idea. That's someone's always ends up being right, and apparently that's what you have to do on social media. You have to crow about it. I guess there's a lot of animosity that gets built up between the parties there. But anyway, that's how quickly this could turn into a bullish setup because you've got the trend going with you. At the same time, you have to acknowledge that if this does drop here, and the rest of this market's careening lower, and the defensives are still being bid, and rates are still plunging because there's a flight to safety, and maybe there's problems in Japan, and the VIX, which is at 2134 here, 15 minutes before the close of at 4 o'clock of stock trading, that's kind of one of your higher closes towards the end of the week that we've seen in a little while. So it is what it is. It's a tough call at the moment, but if this one starts giving out, I think you have to be concerned. Another one, right? This because if you, I'll bring up this chart, and you'll see that there's some right when it comes to XLK and SMH, it's somewhat similar. This just didn't perform as well, and it's already retreating. But these have been the main lead sled dogs, really, for a lot of the bull market, as many of you know, and they're all not really acting well. With SMH, I still think looking the best, and with the potential to put in a higher low and start and go and keep things alive. But the pressure's on. The pressure's on. You've got XLC getting close to a key low. This doesn't hold, right? Just on a price structure basis, you start looking at, well, where's the next big level? Naturally, there's other levels. There'll be fibs in here. I'm just saying visually, right? Where's the next big level lower? And that probably comes back in towards here, right? You probably have to say somewhere in there. If this level here is broken, you probably start coming into the former highs, kind of bisects a lot of those candles right there. Then it's going to be towards the lows of those candles, but that's obviously going to be down another 5 or 6%, so to speak. So that would be a rough area. You kind of would have this sort of a wide double topping that you'd see. It would look a lot closer, right? If we switched over to weekly, it would look like a standard issue, sort of double top, not a tight one, not a super wide one. But that's what it would look like there. And I feel like the way that we're closing isn't helping this cause. It usually, right, if you get a week close on a weekly basis, if there's more to it, right, the cycle is shifted, then you're going to have probably a few weeks of rough stuff. You usually don't just erase when you do have a rollover and if you were to break support, I'm saying, you have this rollover on a weekly basis, um, especially if next week's a poor one. Yeah, it could mean we have a couple more rough weeks there that follow. So we'll have to see, but I think you have to keep your eye on SMH because this is really it. XLE is probably a little bit of a different story right now. It's been such a bat out of hell. The defensive positioning sectors are, I think, acting the way they are because of this perceived risk and for various reasons. But when it comes to energy, right, and utilities and so on and so forth, yeah, this is bid. There's other factors always, but there's also that traditional defensive role, and with I guess with crypto being under pressure, um, and so on and so forth. That's not there. The demand's going to come online. They are all thinking with these data center demands and things like that. And maybe that'll pick up. And that's probably true. I mean, I think this has a lot of room to make up. It's been lagging for so long. So, and we've taken bullish trades in here. And we had XOM. I think I mentioned that last week. It had a good run. That and the XLE itself has had a good run. I would like to have seen more paper in there. We had some rinky-dink names like Rig. I want to say there were a couple others, but it wasn't the across the board that I've seen in the past. Let's put it that way. But let's now back up into the major index ETFs. And for that, I'm going to try to get us a little bit more detail on the chart, unfortunately, with those annoying labels that are stuck on there. And that's just sort of frustrating, but what can you do? We're going to go into, we're going to go into, we'll start out with the SPY. And so here's your SPY. Let me try to enlarge that so everyone can see it. And you can see where we are. This is the juncture that I'm talking about. If you start plunging back beneath here, you haven't broken your 100 day, which is rising there, kind of in that gray white color, dashed white color, which is the middle of my Bollinger Bands. But you do kind of have double top, triple top, lower high, whatever you want to seize on. You've got this struggle there. And then, I think I'm pretty sure too, you got really close to some fibs that I don't have overlaid here anymore. And we're below the key 690 level that we identified for a while, which I'll just take off at this point. So we got below there because that was a big level. So all this is, uh, all this stuff here suggests, right, that if you plunge below here, that could trigger more selling. You could start exploring, right, lower fib levels, retracement levels. You could start hitting the 150 there in rust colored. You could do the 200 down here in purple ultimately if you do fall even further. So that's that. But this is not ending nearly as well as we did right last Friday. You can see this is a much poorer finish. You could see that the momentum is still getting whacked lower, right? So today is not really helping anything quite yet. The fact that it didn't break down is good, but it could be temporary. But here's the problem, right? Drop down below, rally, false breakdown, right? They clear people out, scared them, scare them really for the third time within really about just over a month, and then they start working back up again because you've got that AAII contrarian sort of overly bearishness, and you've got shorts positioned in some key areas that once those big tech ignites, then that can really lead and a lot follows. So there's that factor, right? You've also got that you break down and then you can just continue lower. You've got the fact that you could hold here, continue higher, and then everything's starting to look like a recovery, and then they rug pull it again because the recovery is not very impressive, and that just rolls over again. And your shorties, all your short-term SMAs are starting to roll over, and they could start getting below the 50. Now, I'm not a big MA crossover guy, especially with simple moving averages, but I know a lot of people do like to keep that old school approach. I feel like it's a very late to the party signal, so I don't really trade it, but that could bring my point is that could bring even more sellers into the mix. And so that would be a problem. And really, this finish is not a great one in terms of how the charts look across the board. This could very easily go from, if we have a rough finish to February, that could really kind of monkey wrench the bigger picture kind of monthly charts. And that means you probably get that kind of volatility and turbulence for longer. So we need really them to fix the technical problems that are occurring now that could intensify. We need to get that fixed by the end of the month. Otherwise, usually when you have a rough month when you have a rough monthly chart development, that can sort of portend a couple more rough months at the very least, even when you're in a good uptrend. It doesn't always work that way, but usually there's at least another rough month. So that's not what we want as long-term bulls, but it's part of the short-term trading game, of course, for sure. But and it's inevitable. I mean, it has to happen from time to time. It just can't be that easy. And I think the key is just not giving too much back and maybe making from your short-term trading to sort of help offset what you might lose in your long-term commitments. That's just another way of looking at it. Let's jump over to the IWM, which I feel fortunate to have gotten out of. I was trading IWM when I could, which is not very often, but I had a little bit of time. I was waiting, got some things done, and was waiting for something to develop. I started getting long once I'm sorry, we started getting long here when we were extending the rally from last week, and then I started noticing this thing just started losing its juice. And instead of I didn't even stay in for Wednesday. I was just like, I'd rather get back in if they open up and they hold above the Tuesday's action, Tuesday's open, I'll feel better about things, and they just weren't able to. And so, as is often the case, they'll gap things up and then sell into them when they want to distribute. And I feel like there's been a lot of distribution possibly happening here in this market. So again, it's a similar thing. Don't want to belabor it, but you haven't cracked anything. Nothing is really your 50 is just not cracked, right, in gold. Now you could say, well, you're below your shorties, but of course that happens from time to time, and we have to allow for that. But yeah, I mean, it's held up decently. They brought it to a similar level here today. They're closing things better. It's a little bit of a positive sign that things have held for now, but uh, yeah, I don't know. I mean, it's not a terrible thing, but it's also like, yeah, you could easily be cracking that 50. You could be making a new low, and you could go right back into test mode there on that. So that is where that is, and that the jury, the jury's still out. Is this yet another sort of double top low or high, and we're going to see more of this? Don't know yet, right? Just don't know yet. The diamonds were a disappointment, clearly, right? Because they had powered so much. They were doing possible breakout move, and that that extended ever so slightly on Monday. Then they started the reversal maneuvers there on good old turnaround Tuesday and stuck with it. And lo and behold, you're almost back to where you were, where you not quite where you opened, but I guess you could say if this here is Friday, this is Thursday, so you're back to a Wednesday ago, roughly speaking. So after a false breakout attempt and sort of looking a little sketchy there, right? You could see that could easily make it to the 50 that in gold there with any real weakness on Monday, that starts opening you up for more. So you really want to see the 50 hold. That's why some people run these things. They kind of want to see the tiers down when you're in an uptrend and where they think just basic SMA support would come in, overlay that with fib retracements and other things. That's something that's been pretty common, I think, over the course of time. But really, it's not a disaster here. It might feel really rough under the surface of the market, and for good reason. I think some of what I've seen suggests that some of these moves that have happened to some stocks, many stocks actually, are very rare in terms of these are some of the wildest sort of under the surface of the market moves that you've seen, with the market not really doing all that much, not breaking down all that much. So for now, you might say, well, that's a feather in the bull's cap, and maybe it is, long term. But you're just going back to things like the spiders, they're right on support, and the Qs, which we haven't talked about, those are right on the 150 right there. So you're holding above it. You have a slightly higher low put in today. Could this be the retest that's successful? Could be. That's the thing. That's what I'm saying. There's so many buts right now because of exactly where you are and the way this day ended. So, and you just don't know. Over the weekend, I think things look concerning, but you just don't know what you're walking into on Monday especially with this administration. Most administrations, you're probably not going to have the rate of news cycling that we have with the Trump administration. So you always have to sort of factor that in. I think it makes trading harder, because you just don't know what's coming your way, and it's just news that you don't often see from, let's say, a more traditional administration. So you just don't know what's on your way, but you could easily see how this could turn into a W or a double bottom, and you could go right back up, especially because they've got the NVIDIA, the lead sled dog of the lead sled dog factor. You've got that reporting right, not this upcoming week, but the following week. And if they start to ignite that in front of earnings for whatever reason, or ignite it post earnings, if it sticks around here, doesn't fall further, and they ignite that, that could drag so much up with it as well. So I'm looking at all of it, just saying that we have to call it as it is, and just not a pretty week, not a pretty close. They are hanging on, give them that, but just a concerning way to go out, sort of indecisiveness, right on the cusp of possibly making lower lows or at least testing recent lows that were key to hold. Really, a not so impressive rally attempt, that didn't really, especially here in the Qs, that wasn't able to fight its way through the declining 20 SMA there in blue and the 50, which was just above it. It just wasn't able to get through those. That's really, especially from what's often the lead sector, I should say the lead index ETF. That's not a good sign. So we need this. If you're a bull, I'm not a bull, by the way, but if you are a bull, I mean, obviously you really don't want to, you might want a little clean out below here where they shake even more people out and run it and gun it, but you don't want this thing to start just continue to sort of trickle lower and then put bigger things under pressure and trigger more selling. that could spread to some of your other longs. You don't want that. So, but it might be a good buying opportunity and for long-term positioning to take some of, some positions, uh, or add to some positions, right? Just on an oversold, still in an uptrend basis. But yeah, there's a lot of unease here, and I think the problem you have to really factor in is that uh, you have to factor in that the story that a lot of this has been built on, the story might be changing. I saw some notable commentators, right, contributors talking about how the AI, let's say, destructiveness of the AI, the disruptiveness of the AI, it could start to really happen more quickly than was anticipated, which has always been the argument about stuff like that, that it'll just continue to sort of accelerate. But I think it's accelerating from what I read, at least the people I read, it's accelerating maybe faster than was anticipated by the so-called experts. I certainly am not an expert on it, but I'm just giving you what I came across. So that acceleration is what is really spooking people, and they start to see whenever they start to think about being long something that could be affected by it, they start getting spooked and sort of connecting invisible dots and saying, well, once this happens, then this will happen. This is going to wipe this, that, and the other thing out. To me, it seems possible. I don't know enough about it to say it will definitely happen. I'm just saying that I think some of the arguments seem plausible. I said, I don't even know, maybe like 6 months ago. I don't remember if it was 9 months. I don't remember if it was a year ago because life is just super busy. And I feel like I would love to do this kind of thing, but more in depth and organized and methodically. And I can't, but in terms of like producing content that would hopefully save folks time and all the time we put in trying to read through everything that's popping up out there, but and the chart work, etc., and bring it all together. But yeah, I feel like about 6 months to 9 months ago is when I started thinking that AI could start making a difference. I can't say exactly when, because my initial gut take was that it was going to be the initial hype wouldn't be justified in the next few quarters to a year, but these guys really get far ahead of themselves and then they overjack things, and then the reality is just not there. um and so I feel like there was all this expectation and it wasn't really showing up for a while, but I think it started to show up more and more. It seems like it did. I can't prove that. I'm just saying it seems to me like it did from some of the things I read, and now the things I'm reading are that it's going to happen at an accelerating pace from even what they expected, which was a base case was an accelerating pace. So I don't want to say it's going parabolic, but it's toying with accelerating into maybe a parabola. The way some of these guys are talking could be overblown. There's disagreements among experts. You all know the drill. But it's just interesting that VIX, which has been working its way up, did actually finally close, as opposed to last Friday when it did the typical VIX tuck tail and completely collapse. Did back off the highs, but relatively strong close for a Friday for the VIX. So, and I feel like the way that this week ended is this market is teetering without going with the apostrophe on teeter in. I feel like it really is teetering, to be sober about the whole thing. So let's bring in just a quick view of the four lot, and we'll just get a quick snapshot on them so everyone can see just the same chart I'm pretty much running, but on each one of them, so you get that look. And right now, you can just see, I think the cues, they're just really defined that way, where the downtrend is in control. It's got to do some work to break through that. It's really key given how important tech is to the whole story. And if that doesn't happen and this keeps getting worse and worse, you could get that spillover, and you're just set up where you've got lower highs or similar highs and you rolled over without much of a fight so far. The good news, I think, is that market breadth was better. So it wasn't better than the sectors and better than some of those views. So here's the SPY, not that it matters, but this is all hanging in there to me fairly well. So I have to say that the breadth doesn't really, if I only looked at market breadth, I wouldn't be so worried about anything because I feel like these are still doing well. So I mean, these indicators are still performing. But if I this is where it starts getting you more worried when you look at this kind of a thing, right? And you come across, and we do this every week, but you've got defensive, defensive, right? Hanging in there, powering. Here's another defensive XLP, powering, massive put buying in there. People may think it's stretched. I have a small bearish position in there. I'm looking to wait for it to roll over to really do something. But I put something small on in there, but it's going to collect me some premium for a while, and then I'll probably look to collect more premium. But yeah, I agree this is stretched. I just took a very small position in that one. But that's very defensive. Discretionary rolled over, right? It tried and then rolled over, and it's back near lows. And you've got something which was powering, which is important, transports. They just completely reversed too, right? And then you had this performance though, where your strong sort of Dow-esque sectors, XLV, XLI, they finally cooled off right towards the end of the week. Here's XLU going hog wild to the upside. We did have some bearish trading happen here in XLF, so we got in that one with some puts. But financials breaking down, transports breaking down. That's not a good look. And your former leadership sectors, XLC, XLK, both worse for the wear, after spiking up earlier in the week. XLE, as we already covered, right? That's been a powerhouse, but probably due for some kind of a like pause or pullback just because of its success, and I still feel like this to me is a great long area. This to me is a great long area. If this bull market stays on track and the world continues to perform as it has been, I just don't see how these things, which are, I feel, going to just stay in a basic way, just they're going to stay in demand. Don't see how they do not stay in demand. And as long as the price action it continues to work, the trend continues to work on the charts, I'm going to be looking to trade them from the long side for now, as I see it now. But sectors wise, this is really risk off sort of defensive positioning. If you go back and you bring in the what we were just looking at on this chart right, I say we were just looking at on that chart. I wonder what happened. Maybe it's hidden here. Excuse me 1 second. Let's see if I can get that to cooperate. Yeah, there it is. So we'll go back over here, but the T and X, you'll see where the yields really have plunged on it. This is just the 10-year, which is I didn't type right CGI. But yeah, this really has rolled over, right? So real yields are really coming down, and that's partially right due to expectations from the Fed, what's likely to happen with Powell on the way out and the new guy supposedly on the way in or theoretically on the way in. That's maybe part of it. The economy's part of it, but it could also be right defensive positioning too that ripples across, really the term structure of the bond market. So it is what it is, right? It is what it is. That's coming down. If you want to just treat it very simply, that is a more of a defensive situation. And I'm trying to bring something else. Why is that doing that? Oops. Let me see if I can get something else up here for us. I don't really want a messy chart, and I'm going to get one because I'm kind of tinkering around with a lot of things, but you could take a look at this because I don't think it's available. At least I don't know what the symbol is on TradingView. It for left tail risk, left tail index. You could see that it's bid up, right? Meaning that the downside is being bid up. So the protection is being bid up, and now this is what we see, when people are getting concerned, and so much like the VIX, does it spike or not? So I don't belabor that, but just saying there's a lot of things out there and yet we still have sentiment that argues that, it's already maybe spiked a little too much for bears, and we also have the shorts really going maybe a little bit too hog wild, and maybe again because that's contrarian, and the shorts have maybe overplayed their hands, and then a cheesy kind of measure that we go back to from time to time though is just the fear fear and greed index, and that's firmly in fear, as you can see. So that's why it's hard to make that argument that yes, we continue to plunge, or hey, we definitely bounce from here. You can balance, you can do again, you could say bull, but bear, point, right? You can do bull point and bear counterpoint or vice versa with a lot of things, which makes it very difficult. So I'm not really putting out that kind of sorry, table pounder, which turned into a head pounder, because I came pretty close to being really excited, compared to how I normally am last week, thinking there'd be more follow through. And as I say, you could say, well, it wasn't that bad, Wayne, if you want to pick up my spirits. It almost got to the all-time high in the spiders. But yeah, it did, but it just was unimpressive. I mean, it just wasn't what I thought it was going to be. I thought that was going to happen probably, let's say Tuesday or Monday or Tuesday, and then maybe they push it through by Wednesday, and then we see if it's real or not by the end of the week, kind of like a another sort of flush out. But they weren't able to do that. And that's the thing. It's a tough call. You don't know all the factors. You're right. Unfortunately, I don't have access to all the factors. I don't know, where all the gamma positioning was or how the gamma positioning developed. I don't know. I don't know, what institutions are doing. I do know now that I should sort of knew intuitively that because we were still really getting earnings that yes, buybacks have tailed off, but I didn't really know where they were, and they were apparently at the last couple of weeks they sort of been dropping off pretty extensively. So you'd expect that that blackout period was, I guess, still real heavy or whatever you want to call it. So, but yeah, I think on that note, because I think I did show the VIX, but yeah, that's about the only other thing I can just show to end it. But yeah, the VIX closing here, I think all things being evaluated, I'd have to say you have to be a little more concerned. If I were to assume news neutrality, there's nothing really significant happens between now and Monday. I would think that the Bears are kind of in control. The Bulls probably didn't do enough today. All they did was barely cling to key support. There's probably going to be a little bit more push. The Bears maybe are still in slight control. And then, if that's the case, we see if it's a false breakdown. Should we break down or not? But that's me forcing an opinion. That's what I'd have to come down on as the opinion for now. I'm not, I think there's too many this but that's, as I've been saying, to really be pounding the table on anything. And I'd rather just sort of take it as it comes. But I'd be ready for the gang to roll out, quite a few bags of tricks, and everything could change. Even the tricks that I'm expecting to be played, that could even change depending upon how much news develops between now, and Monday's open. Or wait, is it Tuesday's open? Or am I thinking of the right thing? I think so. Let me do a quick check before I end on a cliffhanger. I'm going to do next stock market holiday, and yeah, that's it. That is it, right? It is President's Day. Yeah, that's right. So we're talking about Tuesday. So I guess a lot, even more could change, right? Because you've got the extra day there. So we'll see everybody after this long weekend then, and I'm going to wish everybody a safe and happy and hopefully joyful and relaxing weekend, and hopefully you won't sweat your risk too much over the weekend. And I wish everyone um, a great week ahead. And I also want to say thank you for tuning in, and I hope you did get something out of this week, and hopefully that helps you out in this week or an upcoming week in the future. And yeah, as they say, stay prepared. Remain prepared out there. We're at a dicey juncture. So everyone take care and we'll talk soon.